Hello students, I am Narsimlu, commerce teacher. Today I am going to teach you CC second year accountancy unit 2 consignment accounts part 8 valuation of unsold stock. In this video I will explain the procedure how to valuate the unsold stock in consignment business. Students, here you see consignment valuation of unsold stock. The value of unsold stock includes the purchasing price of unsold stock and proportionate direct expenses or non-recurring expenses incurred by the consignor and consignee. Recurring or direct expenses which are paid to transfer the goods from the consignor to the consignee go down. Example: transportation, insurance, loading and unloading charges, freight, custom duties and dock charges. Dear students, here while we calculate or evaluate unsold stock in the consignment business, we need to understand three important terms and their usage. One is purchasing price of unsold stock. That is one point. So here we can get the purchasing price of unsold stock. Just we can go to multiply the unsold stock with the purchasing price. Then we can get the total purchasing price of unsold stock. Okay, it's very simple. Next, when we talk about direct expenses or non-recurring expenses met by the consignor and consignee. Here we should know the differences between recurring and non-recurring expenses or direct and indirect expenses. Non-recurring or direct expenses which occur in the transfer of goods from the consignee go down to consignor go down to consignees go down. So whatever the expenses either consignee or consignor met on the transfer of the goods from consignor go down or place of consignor to the place of consignee. Okay students, and here direct expenses are those expenses which occur only once on the consignment stock while they transfer from consignor place to consignee place. So here indirect expenses or recurring expenses. The term recurring itself denotes us that recurring means frequently happening expenses or frequently paying expenses. So which we pay again and again in the business organization are called as recurring expenses. These expenses also called as indirect expenses. Suppose electricity bill go down, rent, etc. These are the examples for recurring expenses. Okay, salary of the employees, one more example. So all these are the recurring expenses. And come to non-recurring expenses or direct expenses which we met only once in the transfer of goods from consignor place to consignee place, such are transport expenses, loading charges, unloading charges, insurance on the consignment stock, cottage, etc. or the examples for direct expenses. I hope children you understood the differences between direct expenses and indirect expenses. Direct expenses also called as non-recurring expenses, and indirect expenses also called as recurring expenses. So dear students, here we should add only direct expenses in the proportionate of direct expenses of consignor or consignee to the purchasing value of unsold or purchasing price of unsold stock value. So three important points we should be noted in our mind. One is purchasing price of unsold stock, purchasing price of unsold stock, and we can go to add consignor direct expenses, and later we can go to add consignee direct expenses. Then we will get the unsold stock actual value. This is the procedure to calculate unsold stock value. See here, and here we given a schedule, a table. See, non-recurring or direct expenses. What are the non-recurring expenses? You can go to see here. Non-recurring expenses paid by consignor in the left hand side. On the left hand side we can go to see non-recurring expenses paid by consignor. So what are the non-recurring expenses? Freight, carriage or cortage, insurance, parking, loading charges, dock charges, customs duties. And come to right hand side, where non-recurring expenses paid by consignee are given. One, freight, and second, cortage to his place. Octroi. Octroi means here, dear students, octroi means it is a local tax that is collected by the local governments or local bodies. Here custom duties and unloading charges, dock charges. So all these are the non-recurring or direct expenses of consignor and consignee. Okay students. So here next week observe here recurring or indirect expenses. In case of consignor, bank charges for discounting the bills or check received, expenses incurred on damaged goods. Okay, these two are indirect expenses. And come to next one, recurring expenses incurred by consignee: go down rent, go down insurance, salary to salesman, advertisement charges, selling expenses, sales commission, etc. So all these are the indirect expenses of consignee. Okay, so here we understood the differences between direct and indirect expenses or non-recurring or recurring expenses, and list also given here. We understood all those expenses which comes under recurring and non-recurring heads. And come to next, here you see the procedure how to evaluate unsold stock. Very simple. Cost of unsold stock. Here cost of unsold stock we will get we will consider purchasing price of price and multiply it by unsold stock. Then we will get cost of unsold stock. Then we can go to add proportionate expenses of consignee. Here what type of expenses we should consider? Here we can go to consider direct expenses, proportionate expenses of consignor. Here not consignee, consignor in black letters that is given, consignor not consignee. Add, and this amount should be added to cost of unsold stock amount, that is proportionate expenses of consignor, and we will get some amount. To that we can go to add proportionate direct expenses of consignee. Then we will get unsold valuation of unsold stock or value of unsold stock. Okay students, like this we can go to evaluate unsold stock in the consignment business. Let's we see one simple example. Here example problem. Balraj of Bandar sent 100 cycles costing rupees 30,000 to Janardhan of Jahirabad on consignment basis. by spending rupees 3000 towards freight. Janardhan spent cottage rupees 400, go down rent 750 and sold 80 cycles. Calculate the value of unsold stock. So here important points are given and we are asked in this problem to evaluate the unsold stock value. Okay, so you see total cycles consignor sent are 100 and which worth of rupees 30,000, and Janardhan of Jairabad received those stock and consignor spent 3,000 rupees towards freight. So it is direct expenditure and we should be clear about it, about the expenditure and type of expenditure. 3,000 rupees paid towards freight. If you get any doubt regarding the direct or indirect expenses, just you can go to see the list that was given in the last or previous slide and see freight is the direct expenditure of a consignor that should be considered as a non-recurring expenditure. Janardhan spent rupees 400 towards cartage, so this is the non-recurring expenditure. But whereas go down rent rupees 750 is the recurring expenditure, because every month we need to pay the rent of go down to the owner of the go down. So it is the recurring natured expenditure. While we evaluating the unsold stock in the consignment business, we should not take into account the indirect expenses. Okay, keep this point in your mind. And 80 cycles were sold. So here 80 cycles were sold, and we are asked to, in this problem we are asked to value the unsold stock. So let's see, we can go to solve this problem by using a simple pro forma. So valuation of unsold stock. See, cost of 20 cycles we need to find first. The 30,000 divided by 100, then we will get one cycle value. So that can be multiplied with remaining cycles or unsold cycles in the consignor's go down. So 30,000 divided by 100, then we will get 300 per cycle. So there are 20 cycles are unsold, so that should be multiplied by 300 multiplied by 20, then we will get 6,000. Now we can go to add proportionate consignor expenses. So consignor total direct expenses are rupees 30,000 towards 3,000 towards freight. 3,000 into 20 by 100, 20 cycles are remaining, and 3,000 that he spent on 100 cycles. So 3,000 into 20 divided by 100, then we will get some amount that should be added to the cost of cycles, 600. Next, add proportionate expenses. Non-recurring expenses we should consider here. We should not consider recurring expenses. So go down rent is the recurring expenditure. We should not consider it for the valuation of unsold stock. And cottage is the non-recurring expenditure that should be added here. See, proportionate consignee expenses 400 into 20 by 100. So he spent 400 rupees on 100 bicycles, and it will be multiplied by 20. 400 divided by 100 into 20, then we will get 80. So if you calculate the total, 6,000 plus 600 plus 80, total 6,680. This is the value of unsold stock. Like this we can go to evaluate the unsold stock in the consignment business. Okay students, I hope you understood how to evaluate the unsold stock in the consignment business. Step by only 3 points. These 3 points are important here. One is cost of unsold stock. We can go to calculate first. Next, to that we can go to add consignors direct expenses in the proportionate rate, and come to next one, add to consignees direct expenses in the proportionate of unsold stock. Okay, so like this we can go to evaluate unsold stock in the consignment business. Okay students, I hope you understood how to evaluate unsold stock in the consignment business. Thank you for watching this video.